Welcome back to our series. This Francis Online Tuition, sponsored by Odum Business Consult. Okay, so we are moving on to the fourth item on the question, which says that a credit note of 148 sent to a customer for returns was overlooked. Wow, the examiner is very intelligent here. Okay, so we are saying that a customer received a credit note from us, but then it was overlooked in the books of the business. It means it was not, the term here, the key word that you see here, overlooked, it means it was not recorded in the books of the business. Okay, the accountant forgot to record them in the books of the business. And what is meant by credit note? A credit note is a note issued to a customer from a business, signifying him that his account has been credited for returning goods to the business. So whenever a customer returns a product that we sold to him due to one or two reasons, the business has to issue, or at times issue, the credit note to the customer, telling him that his account has been credited or reduced by the amount that it is being found on the note. Okay, because whenever a customer bought something from us on credit, we have to debit their account. So if we are reducing the amount due to one or two reasons for returning some product to us, then you have to credit the account. So a source document for that is what is known as a credit note. Okay, so a credit note is a note issued to a customer by a business, telling him or her that his account has been credited for returning a product to the business. And here, the accountant didn't consider this note that was issued out of the business, meaning the sales account or the sales figure that you see here, which is 102,320, has been overstated, okay, by 148, or an amount of this has been excluded from this figure. Okay, it has been excluded from this figure. And then the debtors figure too that you see, do we have debtors here? Yes, the debtors figure that you see here too, that one too has been also been overstated. Okay, sorry, this one, the debtors figure that you see here has been also been overstated by the same figure because it was overlooked. It was not recorded at all by the accountant. So how do we remove this 148 from that? So here we are going to credit the customer account by 148. Then we debit the sales account by the same figure to reduce the amount to their original figures. Okay, so as I said, you have to identify the accounts in the records. When you do that, you analyze the impact of the mistake committed on those accounts. Then you use the double entry principle to rectify those ones. So now that we've identified those things, let's go to our solution board and start with our workings. Okay, so we have to open sales account. Okay, open sales account, then you open customers account, and he said we are going to debit sales account with an amount of 148 in the name of what? Customers. Okay, customers 148. Then we credit customers account in the name of sales with an amount of 148. Okay, and when you are done with that, you have to transfer it from your workings or from the T account to the journal. as I keep on saying, that's the requirement for that. So in writing up the journal, the account debited would come first, and the sales was debited. So sales account was debited with an amount of 148. Then customers account will follow. Okay, so customers account will follow, which has to do 148. When you are done, don't forget your narration. So here we can say that a credit note to a customer omitted from the books now corrected. Credit note, a credit note, okay, a credit note to a customer omitted from the books now corrected. Okay, now corrected. So this is the solution for that particular question. Okay, so as I said, after reading the question, you have to identify the account involved. We have the customer account, and then we have the sales account in this particular question. Then you do some analysis on the impact on the account, and when you are able to do that, you use the double entry principle, which says that every debit entry should have a corresponding credit entry, and every credit entry should have a corresponding debit entry. Okay, so we have done it nicely. Okay, we have done it nicely. So this is the solution for item 5. Okay, item 5 or 4 rather. Sorry, item 4 on the question paper. We opened the T account. For that, we debited the sales account, then we credited the customer's account. From there, we posted it to the journal, which is the requirement itself. Okay, thank you very much for watching. Please spread the good news about Ghana Online Education so that more students will benefit from this wonderful tuition powered by Odum Business Consult. And if you have not subscribed to our YouTube channel, kindly do that. And the name for the YouTube channel is GOE TV. GOE means Ghana Online Education.com. If you have any question, you can send them through my WhatsApp line, okay, or on the website. When you take the course, you can use my email account that you see on my account to reach me. Okay, thank you very much for watching. See you in the upcoming presentation.